EBOB is the outperformer. So as a trade suggestion, I think probably Q2 or Q3, maybe Q3 EBOB cracks will probably suggest to go long. The main reason is they have, fed this huge liquidation, and they look to be on their way up. They're holding up the whole margin. Hi, welcome back to another episode of Trading Corner. What a crazy few weeks it's been across the whole barrel, but also, every asset class have had kind of max liquidation, a reset on oil prices specifically. But we're going to zoom in a bit as well today on, what crude's doing, what products are doing, if there's genuine demand out there, which is going to help support the market going forward. So I'm just going to quickly start with crude because, flat price, wow, a $10 sell-off, you don't get that very often. So a lot of it, to be honest, the surprising thing, I think that the market was kind of caught offside on a little bit was they thought that this price would have been, already priced in a little bit. So we've had tariff chat for, I guess, about 2-3 months now. And with that, people typically tend to kind of buy the rumor and sell the fact. But that was the absolute opposite this time. So really interesting there. But more interestingly, so I'm just going to jump straight in with crude, is dated Brent has really, really outperformed the market relative to kind of Brent futures, Brent spreads, etc. We're seeing that now start to filter in onto the crude spreads, particularly in the front of the curve. So from last session, when James was here, we were suggesting to go kind of long flies. We liked the idea of being short at the back of the curve because we weren't particularly bullish flat price. And the front of the curve should be supported by strong demand. A lot of refiners coming out of kind of turnarounds. So you should have regional, seasonal demand kind of in Europe and in Asia for May cargoes. So that is exactly what we've seen. All the flies in the front have really performed. But now flat price is settling. It's whether this strength is actually going to start filtering down to the whole curve now. So it's quite an interesting time. I think crude has taken the spotlight for the last couple of weeks. Whether it remains that way, we will see. But the strength in actually the kind of more specific contracts, the dated Brent especially, has been quite exceptional, given the kind of fire selling we've had around it. So yeah, it's been super interesting our side. So Raj, I probably should have introduced you before, but Raj focuses mainly on gas oil, middle distillates, Sing and Europe, right? So maybe we can have a bit of insight on both. So are we seeing the same in kind of the middle distillate space? Is it a bit crazy, or is it not as chaotic?
Surprisingly, it's been fairly quieter on the Sing side. I guess the Sing players are choosing not to react too much to the tariff news, and what we've seen is in fact quite a calm reaction from the Singapore traders. It's been quite a balanced supply-demand equilibrium, and I guess people are just a little bit more risk-off.
Yeah.
So what we've seen is where it was a highly populated physical window earlier, once the tariff news came out, people just backed off, and the number of players on either side on the bid and offer in the fizz window reduced greatly. We have seen an east-west reaction on the gas oil side of things. So there was roughly about a $5 move, which isn't too much considering the way the east-west can react to global news. However, most of this reaction has been on the back of ICE gas oil moving. So European gas oil has been reacting as a future to the rest of the crude news.
Well, that's one of the interesting parts, isn't it? You see these kind of global headlines come out and, as I said, mass liquidations. But because we trade such specific contracts, you're talking here about ICE gas oil or Sing gas oil, it might actually only be kind of 20, 30 players that are really involved in those contracts. Whereas you talk about Brent or WTI and these big liquid futures contracts, there's so many participants in there. Everyone was kind of rushing to exit, whereas you don't really need to do that in the swaps, right?
That's right.
As I said, they're kind of a bit more in control. So maybe that's why we didn't see so much of a price action in these swaps we're talking about. From my perspective, dated Brent didn't really move too much. from your perspective, potentially gas oil or syngas oil at least didn't move too much either.
That's right.
But there must have been some contracts which were maybe knocked out of whack, or was there anything that looked particularly expensive or cheap? Is there, whenever you have these like big liquidation events and the futures drive the prices, sometimes, as we're kind of alluding to, that where there's still good physical demand, some contracts get mispriced, right?
That's right. I think, like you mentioned, I was quite surprised that ICE gas oil being a future didn't see the crack react more. The prompt crack was probably in about an 80-cent range. However, the thing that did react the most was probably quite surprisingly a swap. So
Okay.
the prompt Northwest Europe jet diff that saw quite a big range, around an $8 move, where people were buying in anticipation of summer travel demand before the tariffs came out, and then completely reversed
Had
the
to
market.
reverse. Actually, I think we've got this up here, right? So this is the jet gas oil. So this is kind of the end of March.
That's right.
So I assume this is when the news came out, is it?
Yes, exactly. So we saw the chart actually. So this is a switch from the Balmo being the March to the April contract, and what we've seen is actually a lot of strength into April, with people buying a lot of the jet in order to hedge their exposure ahead of the summer travel season. And then when the tariff news came out, it just absolutely tanked, with
Wow.
people potentially thinking of things like a recession fear or a tariff war leading to jet demand completely falling off a cliff.
Okay.
So that's what we're seeing
And it's
reflected in
kind
the
of
price here.
it's settled now. So this was kind of a one move in one day.
That's right. Yes, exactly. And we've seen it just remain range bound. Overall, the levels are quite healthy still. It's just that we had expected quite strong support for jet travel into the summer season, and that's what we saw reflected here. However, I think now they've kind of normalized and settled into quite a better rhythm now.
Okay. And level wise, is it particularly, attractive levels here to enter, or as you said, is the market kind of balanced now,
That's
not
right.
looking to go too risk on?
Exactly. I think that's all it is.
Okay, interesting. But yeah, quite a graph. I mean, maybe if we map it against what the Brent futures did, it probably looks quite similar, right?
Yes, exactly. I think of all the distillates products, I think this is the one that's captured the move most accurately, and has mimicked the Brent futures, like you said, and perhaps the rest of the market as well, not just oil.
Okay, interesting. So, I mean, potentially what we can conclude from that is there was a spec positioning in that contract, kind of similar to what you would see in the futures contracts. Everyone waiting for this demand to come out, and they just had to stop out realistically. So yeah, I imagine we probably have a few products which kind of follow this profile actually. I think, just pivoting back to crude quickly, one of the more interesting things and why James and I suggested the flies last week is because when you get a liquidation event like we saw, it's, obviously in people's nature to kind of sell whatever they can get their hands on.
Right.
And typically what they can get their hands on tends to be the strongest part of any curve,
Right.
or any product, etc. So they actually end up selling the wrong thing, because when this buying comes back, actually what they have sold pretends to outperform the most.
Yes.
So it's not as simple as just saying cut all your risk and potentially overshort some products to hedge against other products. It doesn't really work that way. And that's exactly what we've seen here in the crude space. We had this big flat price sell-off. Everyone was probably tempted to sell all of the Brent spreads, when in fact the front Brent spreads, I mean, of course they came off, but nowhere close to the degree that the back spreads and flat price came off. So we really saw structure performing very well. So where we go from here, I mean, we're on very healthy crude differentials now. So the physical diffs are strong, the flies on futures are strong, even the outright Brent spreads are doing very well. So it's hard to say that there's like too much upside,
Okay.
but we look at the margin, and the margin is doing phenomenally well.
That's right.
So we've had, as I say, a good leg up in TFLs, and the margin is improving. It means the product demand is there, because these cracks are really getting supported.
Right.
So maybe we just start with gas oil. Like, where do you see the support coming from? The middle distillates, or perhaps it's more the light space?
In my view, I think the middle distillate space is now set to enter a period where historically demand has weakened. However, the cracks have remained quite healthy. Like I previously mentioned, the prompt crack has remained in an 80-cent range where, crudes move $10 at the front. So I think there is some support coming from middle distillates, but perhaps we'd see a little bit more coming from things like the light space.
Yeah.
I think that might see more support, especially headed into driving season in the summer. However, we do probably have to keep an eye on any recession fears or any tariff wars, which might lead to less consumer demand of these things.
Because the middle distillates they're really the ones that should react the most with this kind of global demand or any kind of, economy hit. It should filter into distillates over everything else, right? Typically, that's what we tend to see.
That's right, especially with the industrial sector and industrial demand for diesel and heating oil, both in Europe and in the US. You'd expect it to have taken a bigger hit, but it does seem to be holding up relatively well.
That's
all
very
things
interesting.
considered.
So obviously very resilient there. So yeah, I mean, obviously we have kind of fuel and naphtha, the how they impact the cracks, but really I think the outperformer has been EBOB. It's kind of what we've been talking as a floor about. It hasn't been an easy ride from the looks of it. I think we also had stop outs there. We spoke last time about how kind of RBOB heating oil was a big trade. We'll get onto that in a second, but we had this flush out. It looks in gasoline, and now it is just flying. So that's really helping the margin. So, seasonally, we should be in a space where the margin's doing okay, but we would expect actually cracks to start weakening as we get more of this more of this product out of refiners as they come back online. But it doesn't look like it's going that way, to be honest. So it's always quite interesting, I find, when you have a flush in the market and the kind of subsequent price moves after that. To me, it feels like that it's showing the true health of the contracts or the actual demand in these isolated products. So we've had crude perform well, we've had gas oil resilient. Maybe it hasn't outperformed, but it's doing pretty well. We've had EBOB performing exceptionally well, despite all these stock outs. Naphtha and fuel, I mean, they don't really need to do anything because, the margin is holding. So
That's right.
it seems like we're in a really healthy oil space right now.
That's right.
It's kind of hard to be bearish, to be honest, when you look at the price action like that.
I think, yes, I tend to agree, especially at the front of the curve, where most of the supply-demand balance would seem to be priced in. I think maybe there are some opportunities in the deferred parts of the curve. I see some heating oil cracks, for example. Those could be a little bit towards the higher side of historical ranges, so
Okay.
potentially an opportunity there.
Yeah. So do you think that's because Brent spreads are too cheap or heating oil spreads are too cheap?
It's probably a result of the Brent spreads, to be honest, just simply because heating oil as a complex has also kind of mimicked gas oil and held up relatively okay compared to the rest of Brent, with the bigger move, like you said, coming in the deferred Brent.
Yeah. That's the interesting thing, people kind of look at the headline numbers on flat price, down from 75 to 60, and they think that everything's kind of, we have poor oil demand at X, Y, Z, but actually the part of the curve it's really hitting are these back spreads, and then the further implications are really quite interesting. So in this instance, it might lead to product spread selling in the back of the curve and then Brent spread buying. And that will again filter into the front of the curve, and it could totally change the dynamics. But no, there's definitely, if you think that we have this kind of ecosystem, one thing goes out of whack, the knock-on effects can be huge. So there's probably, maybe 10, 20 potential trades that we could look into that prove to be really good relative value trades when you have a liquidation like this. But I think generally, from my perspective at least, we can conclude that everything in the front looks pretty good. And if there are any relative value trades, as you just mentioned, maybe they're in the back where, to be honest, Brent spreads are just too cheap.
That's right.
So yeah, it's quite an interesting time. I think, if we round kind of three 3, 4, 5 months ago and we saw the structure of the curve right now, people would probably be quite shocked. Okay, great. So we'll probably leave it at that, I think. We'll just, as we mentioned, I think EVOB is the outperformer. So as a trade suggestion, I think probably Q2 or Q3, maybe Q3 EVOB cracks will probably suggest to go long. The main reason is they have, fed this huge liquidation, and they look to be on their way up. They're holding up the whole margin. So that's going to be my trade suggestion. What about you?
Perfect. Again, like I mentioned, I like some of those heating oil cracks in the deferred.
Yep.
Like we discussed about product demand potentially correcting along with the Brent spreads being quite cheap. Maybe some Q1 heating oil cracks being a short from here.
Okay.
The way to go.
Perfect. So we'll catch up in a couple of weeks. Maybe James will be back from his vacation and we'll see where they are.